earnings from Triveni Turbines for Q4. The company had a strong order activity in FY23. Revenue and profit also jumped by over 50%. We have Nikhil Sawhney, who is the VC and MD at Triveni Turbines, joining in now to discuss the Q4 performance. Nikhil, hi, welcome to the show. Well, it was a strong Q4 with, good order booking trends that we've seen for the company. Tell us, how did execution pan out for you all?
Execution was also at a spectacular level. Firstly, a very good afternoon to all of you, and thanks for having me on again. Triveni Turbine had a record quarter again, and a record year for this past year in every parameter, in terms of sales, EBITDA, profit before tax, and profit after tax, excluding exceptional items. But more than that was, of course, as you pointed out, our order booking. Our growth year on year in terms of sales was in excess of 46%. On a quarter-on-quarter basis, it was over 68%. But more encouragingly for us for FY24 is the fact that our order booking for the full year FY23 was about 36% higher. And our opening order book as on the 1st of April 2023 is also in excess of 35% higher. So that gives us a good opportunity and visibility into this current year.
Right. So, the last time you had joined us, you said that you are well poised for 35% CAGR over the next couple of years. Would just like to know the glide path to that, FY24, what kind of revenue growth are you targeting? And as you speak about that, also talk about, the segments, the growth that you anticipate in these segments, domestic, exports, as well as aftermarket. How much will they contribute to your revenues at the end of this year?
Well, that's a great question. We had a conference call yesterday with our investors, and while some investors did bring up that point about the guidance that I gave about 35% CAGR growth over FY23 and 24, as you can see, our performance in FY23 is already far in excess of what we had projected. And so we're reluctant now to change anything apart from what we've already given. We're confident of at least meeting the targets that we've set. More than that, to specifically your question in terms of the segments which are growing, I think it's important for me to step back a second and tell your viewers and our investors a little bit more about the market in which we operate in. Triveni Turbine is a manufacturer of industrial heat and power solutions, as well as decentralized renewable energy solutions. As you would know, 50% of all end energy consumption is in the form of heating and cooling. And so therefore, there's some people speaking in my ear.
Oh, okay. All right. Are you getting some audio?
Yes. Okay. This is much better. Thank you.
So
like I said, thank you. So when we do talk about the fact of industrial heating and cooling, this cannot be substituted by photovoltaic and solar, because electricity is an inefficient form of generating heat. And so that sustains our demand, coupled with the fact that when you look at renewable solutions, which are based on either biomass or waste heat recovery or solid municipal waste incineration, these are generally decentralized in nature, because the amount of fuel that you have to gather together can't accommodate a very large power setting in the hundreds of megawatts. And so this fits very appropriately within our entire product basket. And so when we look at the product growth outlook, not only in India but internationally, we have a very strong order booking. In fact, our inquiry book, which is a foreteller of future order booking, increased by over 41%. It increased by about 88% internationally. In India, we saw a slight decline, but that's primarily driven by the fact that our inquiry book only reflects private sector inquiries rather than government. And we believe that government has a large degree of expenditure over the next several quarters. So we're quite confident on that.
Sure.
More so, as you did point out.
Yeah, I just wanted some numbers to corroborate that. I mean, you're sitting on a base of around 1,250 crores. Even if you look at, say, a 20% growth, which seems like a reasonable assumption, given that, you've done about 40% in the year gone by, about 1,500 crores is doable for FY24 in terms of revenues, or could you do better than that? And how much of all of this would come in from the renewable energy space?
Well, actually, our opening order book is higher by 35%. So that is the type of growth that we would look at least. We do have a lot of book and bill within the year itself. As of last year, approximately 80% of our entire order booking was based on renewable-based fuels. We're agnostic as to what is burnt in the boiler. It could be gas or biomass or even coal. But it just so happens that that nearly 80% of our demand is driven from the renewable space, and which is the trend in the market.
Okay, so what can you guide for in terms of the domestic business as compared to exports going into FY24?
We'll definitely see more growth in the export front, just given the fact that it started off from a lower base for us. We also have a very high market share in the Indian market. And while we do anticipate the Indian market to grow by about 15 to 20% in the year to come, the export market will grow far more rapidly for us.
So what is far more rapidly?
Well, like I said, our inquiry book in the export space increased by over 88% in the year gone by. And so we see by increasing our localization in certain countries, by being closer to customers, that we should be able to overcome any perception fears that they may have of buying from a country like India, which we have overcome over the past several years anyway. We are the second largest manufacturer in this space globally, and the number one, especially as far as renewable energy-based applications go. So we're quite optimistic for the next couple of years that we do have a good track for growth.
You said exports are going to grow faster. What does that do to your margins? I ask you this because, again, last time you joined us, you explained your business to us. You said domestic business is about 8 to 10% EBITDA margins, exports is 16 to 20% EBITDA margins, and aftermarket is more than 25% EBITDA margins. So if exports are likely to grow faster, we can expect your margins to improve in FY24 as well, right?
You bring up a very important point, and yes, logically speaking, the numbers that we gave were more on the PBT levels before tax because we don't have significant depreciation or interest. The margins are more in the region of about 8 to 10% domestic and somewhere in the region of about 18 to 20% export, and the aftermarket is somewhere in the region of about 30-odd%. But having said that, not only will exports as a percentage of sale increase, but aftermarket as a percentage of sales will also increase, which gives us good comfort in terms of margins going forward. But at the same time, strategically, what we found is what we need for sustaining our growth in the years to come, which is 2, 3, 4, 5 years in the future, is that we need to be more locally present with our clients. And what that would mean is a significant expenditure on personnel. We already expanded our employee base by over 20% last year, and we aim to additionally increase our internationalized workforce by about 15-odd% in the coming year.
Right.
So they will be
we're a little
short
on time, right? We're a little short on time. Just quickly before we let you go, what's your Indian market share right now? The last time it was around 50-odd%. And aftermarket, you said, will increase by 1 percentage point every year. What does that stand in terms of revenue right now?
Well, firstly, our market share is quite constant. It's about 50% again. The principal other manufacturer is Siemens, who I think are doing extremely well as well. From your question on aftermarket as a percentage of sales, yes, we have increased in the year gone by, and we aim in the long term, the trend will be to increase aftermarket as a percentage of sales because the opportunities that exist in our refurbishment space, which is a largely untapped market, provide ample opportunities for growth.
Okay, all right, Mr. Sawhney, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Triveni Turbines, bullish going